Good morning, everybody. Welcome today to the session. Um, this week, we're focusing on the whole concept of doing closeouts and control, and then we'll be looking at some of the supporting reports related to the closeout process, and then indirectly other reports. Today, we're going to do some just relatively basic discussion on what all the closeout process entails and what the types of closeouts that there are. Then we'll dig a little bit deeper and look internally into control and see what the exportable accounts are, then how those impact the accounting program external accounting program that may be used for the general ledger. And then we'll walk through one of the handouts that there's 3 handouts for the week. 2 of them are for today. The other one will be for Thursday, for the Thursday session. But we'll walk through one of those handouts. Both of the handouts may be something that you may find helpful, and if so, I would encourage you to download those. Those 2 handouts. And then we'll finish up today talking about the accounting program and then the data entry process into the program. And when I refer to accounting program, I'm really talking about the whether it's a Peachtree product, from Sage, or if it's from QuickBooks. That doesn't really make into the process is basically the same. So now let's go ahead and get started. I will pause periodically, and please feel free to to ask questions. Just type your question down in the webinar thing where it says questions, and Paula is on the other end, and she will be watching that, and we'll pause, so to make sure we can answer questions. So just very basics. What's the closeout process, and what are the types of closeouts? Think of a closeout as a means of doing a business-related close for certain periods of time. Those periods of time typically will be day to day, like Monday, Tuesday, Wednesday, up through Friday. Another one is a close that might be related from 1 month to the 2nd month to the 3rd month. And the third one that's obviously is the next step, which is from 1 year to the next year. Now, the way Sirius does that is that internally in the internals of Sirius, every time that there is a closeout, depending on what type it is, it puts what I'm going to refer to as a marker internally that says that there was a daily close done on March 26th at 10:03 a.m. And then tomorrow, you're going to do another closeout probably, and it would begin from 10:03 on the 26th through whatever date and time you do the next daily close. The closeouts involves a 2-step process. So the first step is what you do in control itself to get the ball rolling, so to speak. And the second step are the steps that you have to do in the accounting program to get the relevant data from control into the accounting program. Data that comes across is information that would be associated with the balance sheet in control and in your accounting program. And then the other part that the balance sheet assets and liabilities is what I'm trying to say. And then on the profit and loss side, the P&L side, is obviously the income, the sales that you generate, as well as any expenses that that happen. Now, what types of closeouts are there? Well, think of it in terms of four. Okay, just to put it in simple terms. The first one doesn't actually do a close. It's an optional step, but one that we encourage people to do, and it's a pre-close reconciliation. The sole purpose of that step, so to speak, is to make sure that everything is in order before you actually do the close. So you might want to use that step as a means of making sure that the statuses of all of the orders are correct. You want to make sure that all of your payments have been properly posted, in control, because it's gonna do the close based on what it knows, what control knows has transpired. So they've got the pre-close. Then you got to think of it as a daily close. Monday through Friday is what we recommend. And then on the last business day of the month, you're going to need to do a monthly close. And on the last day of your fiscal year or calendar year, whichever you're using, you would do a yearly close. And those closes, the first one prepares the data for the accounting software. The other two are more reporting in nature. Now, I'm going to move on here a little bit, and then we'll pause in a couple minutes. What are the exportable accounts that are used then in the accounting programs? As I mentioned a couple minutes ago, it's balance sheet data, and that's going to cover asset accounts, liability accounts, and technically equity related accounts, but they're not really affected at all in the close process. Then on the profit and loss side, which is your income, obviously the income accounts and the expense accounts. And we'll go deeper as we get down to discussion. So how do you review and change what's exportable? Okay. So I'm going to do that by coming up to control and setup in the taskbar, and I'm going to say accounting setup. And then I'm going to choose the chart of accounts. And these are the different types of accounts, okay? So we'll expand some of these so you can kind of see what we're talking about. So in the asset side, the ones that are absolutely critical are the accounts receivables, the bank accounts. That's how the money actually flows. And there's really I didn't mean bank, about in the undeposited funds down here is what I was really referring to. So you got some critical accounts in the asset side, which is the accounts receivable, and then the flow of money that you've collected, for it to get the flow over to the accounting program. On the liability side, you've got customer credits that you may have granted, money that you have collected as a deposit for an order. And then the biggie are the sales taxes that you've that become a liability. In other words, if an order is picked up today, that triggers the sales tax, and that becomes a liability then until your state or county, how many days they give you until that money actually becomes due, and then you would pay it out of the accounting program. On the on the income side, That's where the bulk of the accounts are that that are involved in the close process. Scroll down so we can see it a little bit better. Control separates the sales into all of these different categories. Your system may look slightly different, and that's not really important whether they're identical to this or not. But these represent all of the sales accounts that Control in this particular system keeps track of. So if I select the cut vinyl income, now I'm looking at the specific products in Control that contribute to that particular category of sales. And all of these are similar to that, okay? Now, ideally, in order to facilitate making sure that that Control and your accounting program stay in sync with each other, it's ideal that you would have a one-to-one relationship between what these categories in Control and the categories in your accounting program. Is that mandatory? Absolutely not. I'm fully aware and have worked with clients that say, okay, I've got the detail of what the distribution is of the sales in Control. I'm just going to bring across the total. And, that's perfectly fine. That's perfectly fine. It just makes it a little bit more of a challenge to identify when there might be some discrepancies. And then there's a few down in this other income bucket, credit memos if you've done any, finance charges if you've assessed those to the clients, and then just a kind of a fudge factor here for order rounding. Down in the expense area, there's really only 2 or 3 that are important. Nothing in the cost of goods, nothing in the equipment, labor, material, but down in the other bucket, come on, scroll down. These are the ones that I wanted. There are some in the I'm not seeing what I want. Well, what I was looking for is the here we are. Donations. If you grant a donation against an order, that's how it would get reflected. If you have to write off an order because it appears that you're not going to collect that money, then that would become an expense. So these represent all of the P&L, all of the balance sheet accounts that are important in the relationship between Control and your accounting program. So now, what is it that is needed for these respective accounts? If you're going to do an import into your accounting program for a particular closeout, how does Control communicate with the accounting program so that your accounting program knows what account is affected? Okay. So let's just take one of these here. Go back up to the balance sheet and accounts receivable. Let's just use that as an example. Over on the right, in this area, this particular field right here, where it says external account name, and maybe, depending on your accounting program, maybe the account number. If you're doing an import of the data into your accounting program, one or both of these accounts are mandatory. For example, if you're using the QuickBooks desktop software, it is going to use this particular name as a match for where the data is going to go for a particular day. And in the case of accounts receivable, it's going to be either a debit or a credit. So it's either going to be an increase in the accounts receivable balance, or it's going to be a decrease in the accounts receivable balance. The others are similar. So money that you're collecting, this is going to go to this generic account in QuickBooks or in your accounting program. Same thing with these others. Now, if you want to change these accounts to accounts that are already in your accounting program, that's perfectly fine. This is just the starting point, the way these are all set up in Control. In the case of if you're using the QuickBooks, it doesn't use the account number. It's nice to have it there so that you can correlate number-wise as well as the name, but the actual match is based on the account name, it's the account number. Years ago, I used Peachtree, and it matched on the account number, if I recall right, and not the account name. So it depends on what software you're using. Let me just glancing at my notes just to make sure. Yeah, this is a good spot to stop to see if we have any questions.
We don't have any questions right now, Paul.
All right, I'm going to close this, and we're going to stay in Control for a bit, and then I'm going to switch over. Up in the taskbar is this thing called Quick Reports. And I'm going to select it because this is where the process really begins, okay? Notice that we have a begin close, which is the first one that I talked about. And then there's a close day. And then there's a close month and a close year. And in this particular database, fifth one, it's so that you can do some, get some data from prior closeouts. Now, each of these, if they're selected, there's one or more items over here to the right, and those represent specific reports that are going to get generated, either printed or that you would preview on your screen. This is the financial summary. This is a summary of payments that have been received, and then a summary of the work in process. Close day has a longer set of stuff. This is the financial summary, the payments, sales for the day. Then it's going to close the day. Then in this one, it's going to generate a couple of other reports. One is just a report that you could review that shows what the general ledger changes were. And then this database is actually set up to prepare a file for QuickBooks. And this is the actual file then that's going to get generated. And then this one is using two separate closes. One is closing the day, and one is closing the export period. In reality, they're going to be just a minute apart or less. And then it's going to trigger a backup. So we got several different steps that are involved in the close day. Report generation for most of them, these first three. And this is called an action. And the action is to actually trigger the entry of a close in the database, generate two other files, close that period is an action, and then the last is an action also that triggers the close or the backup of the database. Close month is similar. It doesn't generate any data for your accounting program, That's all done on a day-to-day basis as part of the closed day, but it's going to generate a monthly summary, a monthly AR summary, a sales tax report that's very, very important, generally is done on a monthly basis. And then what's called a closeout listing, and we'll go into more detail on that, in a bit. And then the last is the action to close the month. But no data is being prepared for a subsequent entry into the accounting program. Close year, very similar to the close month, just a different set of reports for the whole year, sales tax report for the whole year, and then the action to actually close the year. Okay. Now I'm going to look. There's some things in here that are not visible. I'm going to go into a reporting setup, and then I'm going to look at reports and quick reports. And there are notice that these are the ones that we saw: the begin close, the close day, the close day. This one, we looked at those. We looked at that one. But notice these others, okay? And the reason that they're not showing is that they're not active, okay? So there are some important administrative reports that I encourage everyone to use, okay? And you can do that by simply coming in the setup, reporting setup, and then select and expand the reports and quick reports. Select the first one, get into the edit mode, put a check mark there that says show it on the menu, and then save it. And I would encourage everyone to, this one is important if you're going to have people clock in and clock out directly in control, then that one is very, very helpful. This one is more management related to help you do a better job of seeing what is coming in as for estimates, what your conversion ratios are, which ones have been lost, which ones have been converted, which ones you have avoided. So all of these others are ones that I think are important from an administrative standpoint. Accounts receivable. So what I'm saying is I would have all of these turned on in my system if I were running a business, today. So I'm just going ahead and turning all of those on, and then we'll go back. Then we'll go back and look at quick reports again, because it'll look slightly different. This one is kind of questionable, but I'm going to go ahead and turn it on. Whoops. Okay, so all I did was go in and review what's in the what the options are for other quick reports, and I turned several of them on, and now we're seeing those that I reactivated. Okay, whoops. I just lost control here just a second.
Does anyone have any questions? Yeah, and also, please remember that the handouts are also listed under the word handouts. And if you select those, then you'll be able to download them. Paul, I've also lost my ability to see all of the attendees, but I do see the question block, so I'm not sure what's going on.
Yeah, I don't know either. Okay, everybody is seeing control again?
No, I'm only seeing your main page where it says CyrSkills session 1. There you go. Now I can see you.
Now you see it? Okay.
Yes, sir.
Okay, let me kind of get my act back together here. Come on, Sally. Jump up. Puppy dog is a pest. He wants to sit on the lap. Okay, so let's go through again, just real quick, the quick reports. I would encourage you to begin with the reconcile, even if you do nothing more than do a print and a preview so that you can see what has transpired since the last time that there was a close. Again, its sole purpose is to make sure that everything is in order. And that is primarily dealing with payments that you have received and the status of orders that is actually indicative of what went out the door, primarily what went out the door, and maybe new orders that have come in, and that the payments have been properly posted. Okay, so I did not print these myself. I simply browsed them. If I didn't do the close, but one of my employees did, then they did indeed prepare these reports, but then they paused and didn't do the close until I had a chance to look. So that's an administrative decision that can be made on a case-by-case basis. There's no hard, fast rule one way or the other. So before closing, I reviewed the bank of monies, the monies that came in. I reviewed the accounts receivables and made sure that the status was correct. If I needed to, I looked at the payment reports to make sure that they, primarily from cash and check standpoint, to make sure that what was in the cash drawer agreed with what control was showing. And then to a lesser degree, I used this. I expected my production people to review this and make sure that things were properly reflected. When they showed the status of an order. Now this one, I am going to do this just to illustrate, but I'm not going to generate all of the reports. I'm just going to generate that first one, not that one. This one, I won't look at that one. I won't look at that one. I won't look at that one. I will look at that one, but not to generate the export. And I will do that, and I will do that. So you can pick and choose. If you don't want all of these to generate in any particular day, then you would just deselect them. And it says I'm doing a close since the last closeout day. And I'm going to do a preview because that's going to trigger these from occurring. This is a prompt that says, do you actually want to do a close today? Yes. This is an FYI that says that the daily close was successful. And this is the closeout period export of the export file that I talked about. And is it okay to close that? And you would say yes. And it did it. And now it's ready to do a backup. And I'm going to say no to that because of the environment that I'm in, okay? So these would be the two reports that I demoed. That one and the financial summary that we looked at previously. So close day is fairly straightforward. I'm not going to talk about the close month because it's very, very similar. And again, keep in mind, there's no data whatsoever that flows that would flow as a result of a monthly close or a yearly close. Okay. The reconcile, we're going to talk about it shortly. Reconciling between your accounting program and control is something that's very, very important. It's easy, unfortunately, to get things out of sync. And that's either going to be because you forgot to import something into your accounting program, or if you're doing it manually, it got entered incorrectly, or you skipped one accidentally. Control is not smart enough to know that everything that it generated for a particular day gets properly imported or entered into your accounting program. So it's good idea to periodically do what I call a reconciliation, which is simply to generate a couple of reports, and we'll talk about what they are and how they're used, to make sure to do a visual check to make sure that the two programs are in fact in sync with each other. Now, what I'm going to do is, how do you get the data into your accounting program? Depends on the options depend on your accounting program. If you're using something like QuickBooks or something like Peachtree or Simply Accounting, most of those, if not all of them, have an actual import utility that you can use that will take the data from control and import it into the accounting program. If you're not comfortable with that, and that's okay, then you can use the one of the reports here, this changes summary. You can use it as a means of manually entering the data into into your accounting program. But the reconciliation then is done something that you would do on a month-to-month. I recommend on a month-to-month basis. Don't let a whole lot of time go by before you check to make sure that everything is in order. I'm going to generate these two reports, and then because I think you'll see the idea. Okay, unfortunately, I don't have a lot of data in here. This particular report is called a closeout listing. And the way it is configured is that there would be a pair of rows like this that would alternate in color. One would be white, one would be blue, then it would be white, and they represent the successive exports or closes out of control. Okay, so it shows the start date and the end date, and then a summary of what was in WIP, summary of what was in built, summary of what was in the new sales, a summary of the taxes owed for that particular closeout, and all the way across. Now, some of these fields then can be very, very valuable in helping quickly and visually verify that things are in order. For example, every single export, the accounts receivable balance for that day must match perfectly. The payments are a little bit harder to depend on because you're putting money into control or into your accounting program, but you're also paying bills. So it's a little bit harder, to depend on the bank payments. Deposits should always match to the penny. Customer credits should always match to the penny and so on across these last remaining ones. So the real key ones for determining synchronization are write-offs, manual credits, customer credits, deposits, and accounts receivable. And as I said, each individual day that there is an export created, this report would get generated. And then you can go back for a particular month. For example, if you did this on a monthly basis, you would have an entry for each of the days that you did an export. So you'd start at the bottom. Is everything in sync total wise? If not, then you go back and begin to look at the individual days. That is the essence of the control. Now what I'm going to do is close these down. And now I'm going to open up one of the handouts because I want you to see that. Are you seeing, Paula, the document that says process for performing control closeouts?
Yes, sir, we are.
Okay. I just want to quickly walk through that. It's intended as a potential tool for owners or anybody that's involved in the closeout process. I referred to it as a cheat sheet, for my people. And basically this first page is you decide what type of close do I need to do today. If it's not the last day of the month or not the last day of the year, then you're going to do these two steps. You're going to do that pre-reconciliation step, followed by the close day, and then you're going to get that data into your accounting program some way, okay? So it's step 1, step 2, step 3. If it's the last business day of the month, then you're going to begin by doing that reconciliation, make sure that everything is in order. Then you're going to do the close day. Then you're going to do the close month. You're going to get that data into your accounting program, either by importing it or by manually entering it. And then you're going to verify through reports that everything is in order and in sync between the two, between your accounting program and control. If it's the last business day of the year, close reconcile the last business day, close the last business day, close the month of December, close the year, get that last day into your accounting program, and repeat the synchronization. So this is just a very, very high level view of the steps that you would take. So the blue ones are things that happen in control. The yellow are things that happen in your accounting program, or you do in the accounting program. And the green are things that you do between the two of them to make sure that things are in order. If you need to go a little bit deeper, then the second page takes it down a notch in detail. So the reconciliation, you're going to choose the begin close, and you're going to review these. If you have difficulties, then the items in red here go yet a second level deeper, to handle things. So pre-close, the close day, the close month, the close year, getting it into control, into your accounting program. This is more geared to the import process, but you would do it with slightly different if you were doing it manually. You would have to use a report to get that in to your accounting program. I encourage you to download this. Feel free to use it. It's in PDF format, but you can use it as a tool or you can completely ignore it. Okay? It's completely up to you. Now, the last thing that I wanted to talk about today is we've talked about the account mapping. What I haven't talked about is a couple of reports that are not in QuickBooks or in Control, some of which I activated. Okay, so if I go back to Control, I need to show Control. I'm going back. You should see Control now, Paula, right?
Yes, Paul, I can see Control.
Okay. I'm going back to Reporting Setup and in Quick Reports. This particular step right here that I've got highlighted may not exist in Control for you. That is one that is not been around that terribly long. If it's in Control, it may be inactive. So first of all, go to your setup, Reporting Setup, expand Reports in Quick Reports, and look for this, Reconcile Closeouts. If it is physically there, then verify that it says Show on the menu. If it doesn't, if it's there, but doesn't have the Show on menu checked, then edit it and simply put the check mark on and save it. And now those two reports that are here will be available to you. Okay. The second handout today contains the steps. Let me bring that one up. I'm going to change back and forth, so excuse me. These are the instructions. If you don't see that reconcile step or category in Quick Reports, then this document here is a couple pages long, might be helpful to you to get that category set up and get the reports in that we want you to have. So I'm not going to go through this in detail, but that's the purpose of this particular report. Okay. So now let's go back to Control. I'm just going to quickly illustrate one piece of that process. So I'm going to go into Setup and Reporting Setup again. Go to Reports and Quick Reports, and pretend that doesn't exist. Okay. So the first thing that you would do would be to add, and you're going to add a report group. Okay. I didn't have one highlighted that I wanted. My voice is disappearing. I'm going to add a report group. Come on. New report group. That's what I wanted. It added it down here at the bottom, and I would simply give it a name. I'm just going to call it Reconcile. And then I'm going to say Save. That's all I'm going to do. That creates the group that we're eventually going to make look similar to this one. So now you would use the Move Up button in column 2 to get it where you want it to be. And I would put it somewhere after the close year. Hang on a sec, sorry. Sorry. Now, the next step would be to add reports to it. So this creates the group. Now, the next step is to add a report to it. So one of the reports was the financial summary. So I would come up to a group where I know that that report exists. And I just simply chose pre-close or begin close, selected the report, and say I want to copy it to. Now I need to tell it where I want it to copy. And this is kind of a long list, so I would scroll down to the R's. And that's the group that I just did. Now, if I come down to the reconcile, all right, make a liar out of me. Copy to. I found that this was goofy the other day. Okay. There it is. Now it's added it. It's added it. And I'm not going to do the rest of it here in the interest of time, but there was one more report that I would add that I would put in the group. And that would be this one. I would repeat the process. I would say copy it to, and I'd put it in that group. And then the instructions will take it one step deeper that change some of the options in this area here that make it unique. Okay? Because this one, well, let's go ahead and do that one. Get it down there, and then we'll look at it just quickly. So what you're doing here in this process is customizing the quick report group, for yourself. So I'm going to say okay, and then I'm going to add it. There it is. Now the options on this last one. Did I add the right? I think I added the same one twice. Copy to. I don't know how in the heck I did that. Okay, what I wanted to do was to show you some of the adjustments in for further customizing this. I would look at the options, and the critical one is that we want it to be the exports or the daily close. If you don't use the export, which is okay, then you would substitute the include daily close. It's one or the other. And this is one that produces that pair of rows for each of the closeouts. Now, where it gets touchy is when you're doing the reconciliation and verifying. The longer you wait before you check to make sure that you're in balance, the harder it is to find the discrepancy and get it resolved. For example, if you're using QuickBooks, QuickBooks is not smart enough to detect a duplicate import, nor is it smart enough to detect that you skipped one. Okay? So the further out you go without periodically verifying that you're in sync with each other, the harder it is to resolve. Unfortunately, I've worked with clients where it has taken a couple of days, hours of time to do that, to get things back in order. So it's the process of doing the reconciliation is not required. It's entirely up to you. I just encourage you to, if you want to make sure that you're always staying in sync with each other between control and your accounting program, consider using that reconciliation process so that you can periodically do a benchmark and check and say, yes, everything is in order. We are about 5 more minutes. I've got in time for any questions of any nature. And if you have further questions on the closeout process, feel free to send me an email, and I'll be glad to either answer it myself or refer it if it needs to be to the appropriate people in Sirius. My email is P, the letter P, Krae, K-R-A-E, @Sirius.com.
Paul, you broke. I'm sorry, you broke up as people were dropping out, so okay. We didn't have the double M.
Okay, it's the P, Krae, @Sirius.com is my email.
Now, Paul, I have a question while we're waiting to see if anyone else does. You didn't do your backup because of the system that you're on. This is actually 2-part. Would you recommend that everyone do a backup every time that they do the closeout because they can set it up automatically? And then the second one is, would you explain to everyone what it actually backs up? Because we've had customers that thought that they were backing up control when in fact they were backing up their system. Were caught by ransomware, or the server went down and they didn't realize that they were not backing up the control database. So would you explain that a little bit?
The environment that I'm in is cloud-based, so there's no need to back up control explicitly. That is inherent part of the cloud mechanism. So that's the reason that I suppressed doing that. The database, if you do a backup, I was emphatic when I had my shop. I was emphatic that we would do a backup every single solitary business day, without exception. And I got very upset with my staff if they got lazy and didn't trigger the backup. That was before the backup could be scheduled as an inherent part of the daily close. What it backs up, I don't know the deep nitty-gritty details, but it's the database. It's the control database that gets backed up. I have worked with clients in the past that have had a catastrophic hard drive failure. Nothing was malicious. They just had a hard crash of a disk, of a hard drive, and they had no backup. That's business-wise is pure, utter catastrophe. I have had the unpleasant experience of working with one or more owners that had a fire, not in their particular business, but one next door to them. Again, it destroyed the computer, and they didn't have the backups so that they were removable from the shop, they had difficulty. So I cannot emphasize enough the importance of being devoted to protecting your business by doing the backup. And it's not only just doing it, but doing it in a way that you can get the media off premise, so that it's not resident at the shop. You're backing up in the event that fails. That's fairly straightforward. You just buy a new hard drive and you restore it, and away you go. But where it gets more delicate is if you have a catastrophe, either vandalism or fire or whatever the case may be, that you need that resource of backups that's off premise in order to get back in gear again. Does that make sense?
And we do have a question from Michael, and that we may need to defer him to consulting. I'm not on the cloud. Where is mine being backed up to? Do you want me to unmute?
Yeah, let me, I got to dust off the cobwebs here. I backed up to an external drive that you can direct the backup to. I don't recall exactly how to do that, Michael, but you can direct the backup process. You can give it the correct path that you want. And I used an external drive. And then I removed that drive, and at least once a week, I took it home, and then I brought it back. But I can't remember the exact. Paula, can you refresh my memory? It's been a long time since I've looked at that.
I don't.
Where the path is.
But if Michael, if you go on, and I'm sorry, I can't unmute you because you haven't entered your PIN. But if you go to the customer website, and you can email me if you can't remember your credentials to get on, under the setup steps, there is a step for backing up your system. So follow it there, and then if you need any assistance, just let me know. Email me consulting@Sirius.com. And it's nice to have you in here, Michael. All right. Thank you, Paul. I appreciate it.
Yeah. All right. I'll let everybody go. We'll be on Thursday. We're going to just explore a couple of it. We're going to add another group for another purpose of reports, and we'll go through the steps to do that a little bit more detail than today. We'll talk about what I think are some of the more important reports as a business owner. And those are the ones that I'll highlight. I'll put it in perspective as a kind of a teaser for today. There are well over 200 reports available in Control. Trust me, I've not, in the 15, 16 years that I've been doing this, I've not looked at each and every report that's there. So there is an abundance of information that Control can produce. I'm going to try to condense it down to what I believe are the ones that are the most important as a former business owner. That's the simple context of what we're going to talk about on Thursday.
We also got another note from Michael that said that he is doing his backups every night. He just doesn't know where it's getting backed up to. So that might be a call to your IT folks. Mm-hmm.
Yeah, I think it's in that case, it's probably default, and it may be backing up to the same drive that the system runs on. And that's the part where it should be, you should closely look at that, Michael, with your IT person, and how you can get that to a different physical drive than where the system runs day to day.
All right. Appreciate everyone coming today. Thank you so much, Paul. Great insight. We appreciate it.
Well, see you
Thank
on
you. We'll see
Thursday.
everyone on Thursday. Bye-bye.
Yep.